Good morning, traders. So I told you I might have another adjustment on this FedEx trade, and I am going to go ahead and do that at this point. If you haven't seen the prior pieces of this, I urge you to go back in time, take a look at how this trade has evolved over time. It started off that it had a fair amount of potential downside risk, although that risk was a ways away. I call that trade a breakout for free, and if you go back and look at that video, you'll see why. And then the last version of this, I adjusted this trade so that it had no risk of loss in this trade whatsoever. Now, when I look at our market, when I look at FedEx, come and look at a chart, we can see that FedEx is all the way back up here at prior highs. Now, that doesn't mean it can't punch through, but I think it's more likely to kind of chop back and forth in this range going forward, at least for the foreseeable future. So based on that, I'm interested in putting on a call spread above the market that will juice this trade a little bit. So how would I go about doing that? Well, I'd simply come in and I would add a short call. I'm going to sell a call. I could make that at the 290, which would essentially make this a butterfly, and then I'm going to buy a long call at a higher price. So I could do something like this, which is a perfectly viable position. You can see what I've done here is I've turned this, which has a fair amount of downside risk, but again, never a risk of loss, only a risk of giving back profits. And you can see that this is fairly positive delta. I have a max profit potential of $3,940 to something like this, where I have a max profit potential of $4,600. I have reduced my downside risk so that before this could drop to only 1,000 in profit. Now the lowest it can go is 1,600 in profit. That's because I would be taking in more money on this spread here, selling this call spread. And of course, I can structure this any way I want. I could set this up into a total flat butterfly, which even gives me a higher level of potential profit. Or if I think this thing might pop up through the 310, maybe I don't want to put that much risk to the upside. Again, it's still not risk of loss. It's only risk of reducing my profits. I could also come in and, do something like this, turn it more into a condor sort of structure. So these are all of the different things that I could potentially consider as an options trader with this position. And I think for me, I'm going to look at this right here. Again, this gives me a fair amount of additional decay. Let me just go back and forth here. So it goes from 3,900 in potential profit, and then my minimum profit, it will still be a profit, is right around $1,000. If I make this move, selling this covered call, that puts me up to 4,600 in potential profit. Keep in mind I'd have to peg this, which I'm not really going to be looking to do. And my maximum, I don't want to call it loss, my gain or my profit has increased. My lowest profit level has increased from about 1,000 to 1,600. And I have flattened out my deltas here. So now if FedEx moves back and forth, it will have less impact on this trade. So I'm going to go ahead, save this trade. I'm just going to add on here that on 327, added call spread to, I call this juicing the trade. So that's going to be our new position. I will share that in the link down below. Take care, everyone.